You are receiving commission as well as the interest. Receiving means it is an income for you. You need to credit the income. We need to know the golden rules and the types of accounts, that is personal account, real account, nominal account, and the rule for each account. Identify which account is this and the rule for that account. So it is easier for you to pass the journal entries. Hello everyone, I am Meghna from the Department of Commerce, lecturer in Vidhyaashram First Grade College, the Temple of Excellence. We are in the session 3 of Unit 1, the subject of accounting. In the last session, we have discussed about the journal entry, double entry system and the basic journal entry. That means how you need to pass the journal entries. We learned in the last session. In this session, we are going to learn problems on journal entry. Before starting the problems, we need to know the golden rules and the types of accounts, that is personal account, real account, nominal account, and the rule for each accounts, that is debit the receiver, credit the giver, debit what comes in, credit what goes out, and debit all the expenses and losses and credit all the incomes and gains. You should know all these rules and the types of account so that it is easier for us to do the problems. Let us start with the first problem. Pass the compound entries for the following transaction. The date Jan 1st, commenced business with cash rupees 5,000, goods rupees 2,000 and furniture rupees 8,000. Here the business is started with cash of rupees 5,000 and goods of rupees 2,000 and furniture of rupees 8,000. That means the cash, goods and furniture, all this is an asset. All this is an asset. And commence business with, that means a person is starting a business with all this cash, goods and furniture. That means person comes under personal account. Personal account and real account. All the assets comes under real account. So, for personal account, rule is debit the receiver, credit the giver. Here, person is starting business with cash means he is giving cash to the business. So, he is giver. So, you need to credit the person. Instead of writing the person, you can write the person is bringing all the asset in the form of capital. So, capital account should be credited and cash, goods and furniture should be debited. Because it is coming into the business, all the assets should be debit and the person should be credited in the form of capital. So, first the date Jan 1st, he is bringing cash, goods and furniture. Cash of rupees 5,000, goods. Goods means at stock. Stock is coming in. Cash, goods and furniture. Cash account debtor. Next, he is bringing goods, that is stock. Stock account debtor and furniture account debtor. While writing 2, give some space and starts with 2. The person is bringing all the asset in the form of capital. He is giving, so you need to credit capital account. Capital account is a representative of person. So, cash of rupees 5,000, stock 2,000 and furniture 8,000. 5,000, 2,000 and 8,000. This all is debit item. Cash of rupees 5,000, stock of rupees 2,000 and furniture of rupees 8,000. All this is a debit item. You should write in a debit column. Here the credit column is blank and to capital account. Capital account is credited. So you need to write in the credit side the total of 5,000, 2,000, 8,000. That is 15,000. That is 15,000. Here the double entry system is used to balance the account between the assets and liability. Here the debit and credit should be balanced. If it is not balanced or tallied means something is wrong. So here it is tallied. After finishing this, you need to write narration. Starts with being, cash, goods and furniture, being with cash, goods and furniture, business started. Or else you can write being, business starts with cash, goods and furniture. Narration should be, it must be written because it is compulsory to write narration. It is a brief information about the transaction. Next, Jan 2nd. Jan 2nd, purchase goods for cash rupees 2,000, from C rupees 1,000 and from D on credit 3,000. That means purchase goods for rupees 2,000. From C 1,000 and on credit 3,000. So here purchase, that means cash purchase is made for rupees 2,000 and credit purchase from C rupees 1,000 and from D on credit rupees 3,000. That means purchase goods, cash purchase as well as a credit purchase is made. So purchase of goods means goods is an asset. And here you are purchasing for cash as well as credit. Cash is also an asset and on credit, that means C and D is a person. So here purchase means when you made a purchase, goods is coming in. Goods is coming in. It is an asset. When the goods is coming in means you need to debit the purchase. You need to debit the purchase and cash. Cash is also an asset. When you purchase, you need to pay the cash. So, cash is going out. So, you need to credit the cash as well as on credit from C and D. D is a person. C and D is a person. He is giving credit. That means he is giving goods in form of credit. So, he is giver. So, you need to credit the giver. Debit the purchase, credit the cash and C account. You made a cash purchase as well as a credit purchase. So, you need to debit the purchase and credit the cash as well as a person. So, purchase account debtor to cash account, to C account and to D account. That is 2,000, 1,000 and 3,000. Next, Jan 2nd, purchase account debtor, to, you made a cash purchase to cash account. You made a credit purchase from C, so that's C account. And you made a credit purchase from D account. This is ledger folio column. After transferring the journals into ledger, you need to fill. So, here we are doing only the journal entry. So, You need not to fill ledger folio column. Purchase cash for cash rupees 2000 and C 1000 and D 3000. Cash of rupees, you need to credit cash of rupees 2000 and from C 1000 and from D 3000. So the total purchase amount is 2000, 1000, 3000. The total purchase is 6000. Total purchase is 6000. So here also debit and credit is balanced. After finishing the purchase entry, you need to write narration. Being goods purchased for cash as well as on credit from C and D. Next, sold goods to Z for cash 2000 and on credit rupees 3000. That means you are selling a goods for cash as well as on credit. That means sale of goods. Goods is an asset. Sale means goods is going out. You need to credit the sales. When you made a sales, you will receive cash. That means cash is coming in. You need to debit, and on credit, the person is receiving the goods. When you made a sale means another person is, the person Z is receiving goods. So, you need to debit the Z. Here, you made a sale for cash rupees 2000 and credit rupees 3000. So, cash should be credited. Cash account, debtor, and Z is receiving Z's account, debtor, and you made a sale. So, goods is going out. So, sales account. Amount 2000 and 3000. 2000 and 3000. The total sales you made is 5000. So, cash sales 2000, Z on credit 3000, the total sales is 5000. Is it clear? Next, sold goods to E rupees 2000 and to F 3000. Here they have given sale to, you made a sale to E and F. They have not mentioned either cash or on credit. If they have not mentioned cash but they have given the person name means it is considered as credit sales. When you made a sale, goods is going out. You need to credit the sales and cash is coming in. Here, you are not making a cash sale. So, E and F is a receiver. So, debit the receiver. You should debit the E and F and you should credit the sales of rupees 2000 and 3000. Jan 4th. E's account debtor of rupees 2000 and F account debtor 3000 to sales account. Sales. The total sales is 5000. We need to write being good sale to E and F on credit. Sold goods to E and F, being good sale to E and F on credit. Next, 5th Jan received from Z rupees 1000 and allowed him a discount of rupees 20. That means you are receiving from Z of rupees 1000 and you allowed him a discount of rupees 20. You are receiving cash means it is an asset. So cash is asset, debit the cash. Cash is coming in, you need to debit the cash and allowed him a discount. Discount allowed is an expense for you. It comes under nominal account. Nominal account say debit all the expenses and losses. Here discount allowed is an expense. So you need to debit the discount allowed. You need to debit the discount allowed. And from whom you are receiving? From Z. Personal account say debit the receiver, credit the giver. Here Z is giving. So you need to debit the cash as well as discount allowed and you need to credit the Z account. So the entry will be cash account debtor 1000, discount allowed account debtor 20 rupees and to Z account. Jan 5th. You received a cash account debtor. Next, you give a discount. It is an expense. Discount allowed account debtor. Discount allowed account debtor to Z account. Z is giving. So, of rupees, you are receiving cash of rupees 1000 and give a discount of rupees 20. The total amount the Z is liable to pay is 120. Instead of paying 120, he gave a cash of rupees 1000 and you give discount as 20. So, total liability amount should be 1020. He is liable to pay 1020. You'll write narration as being cash received from Z and allowed him a discount of rupees 20. Next, paid to C 1500 in full settlement of his account 1530. That means you are paying cash rupees 1500. In full settlement of his account 1530. That means you are liable to pay 1530. Instead of paying 1530, you are paying only 1500. And the remaining 30 rupees, he is allowing, that C is giving discount to you of rupees 30. So, in the same way, what you have made, here Z is paying to you. You received from Z 1000 and allowed him a discount of rupees 20. Here C is giving a discount. That means you are receiving discount of rupees 30. You are paying cash of rupees 1500. Here cash is going out. You need to credit the cash and discount you are receiving. It is an income. So nominal account say debit all the expenses and losses, credit all the incomes and gains. It is an income. So you need to credit, and C is a person. It say debit the receiver, credit the giver. That means you are paying to C means C is receiving. So you need to debit the C. The entry will be C account debtor to cash account because cash is going out, and to discount received account. You are receiving a discount. So C account debtor to cash account to discount received account on Jan 6th. Jan 6th, C is receiving C account debtor to cash is going out, cash account, and you are receiving discount received, discount received account. So your total liability amount is 1530, but you have paid a cash of rupees 1500. You paid only cash of rupees 1500 and you get a discount of rupees 30. So it is balanced. You paid cash of rupees 1000. You need to credit the 1500 and discount is 30. Next, paid salaries of rupees 500, rent 800 and postage 10. Your paying means it is an expense. Salary, rent and postage is an expense. So you need to credit the expenses. When you are paying means cash is going out. All the expenses should be debited. Nominal account say debit all the expenses. Salary, rent and postage is a expense. You need to debit the expense. Cash is going out, so you need to credit the cash. So, salary account debtor, rent account debtor, postage account debtor to cash account. On 7th, salary account debtor, rent account debtor, postage account debtor to cash account. How much? 500, 800 and 10. 500, 800 and 10. So, total is 1310. Total is 1310. Write the narration. Being salary, rent and postage is paid. Next, received commission 300 and interest rupees 700. That means you are receiving commission as well as the interest. Receiving means it is an income for you. You need to credit the income. And cash is coming in. So, you need to debit the cash. Debit what comes in, credit what goes out. When you receive means cash is coming in, cash account debtor to credit all the incomes. Commission is income, so you need to credit the commission. Commission account credit and interest account credit. Cash account debtor to commission account to interest account. On 8th, you are receiving commission and interest. 8th, cash is coming in. Cash account debtor to commission account and interest to interest account. How much? You receive a commission of 300 and interest of 700. Commission of rupees 300 and interest of rupees 700. Total you will receive cash of 1000. You will write narration being commission and interest received. Next, the proprietor took cash of rupees 200 and goods of rupees 300 from business for his personal use. That means any cash or any assets withdraw from the business for the proprietor's personal use, it considered as drawings. The separate entity concept say business and the proprietor is separate from each other. So you should maintain separate accounts for both the parties. Here, if the proprietor took assets from the business, it considered as drawing. He is taken assets of the business for his personal use, so it is an expense considered as drawing. So, you need to debit the drawing because it is an expense. Expense should be debit. And cash, he is taking cash and goods, that is stock. It is asset. It says credit what goes out. Cash is going out and stock is going out. So, drawings account debtor to cash account to stock account of rupees 200 and 300. On Jan 9th, he is taking for personal purpose, that means drawings account debtor to, he is taking cash account to goods, that is stock account of rupees 200 and 300. Total he is taking 500. After this you will write being goods, cash and goods is taken for the personal purpose. Next, sold goods to Amar 1000 and received from him 500. That means you are selling to Amar for rupees 1000, but you will receive from him only rupees 500. That means you made a sale for rupees 1000 and you will receive cash of rupees 500. Remaining 500 is considered as credit sale. You made a sale for cash as well as a credit. So, sales means asset is going out. You need to credit the sales and cash is coming in. You need to debit the cash and Amar is receiving credit. So, you need to debit the Amar. The cash account debtor, Amar account debtor to sales account. 10th, you receive cash account debtor and Amar account debtor to sales account. You receive a cash of rupees 500 and you gave a credit for rupees 500 and total sales you made is rupees 1000. So it is tallied. Being goods sold to Amar for cash as well as on credit. Next, purchase goods from Arjun 2000 and paid him 1200. In the same way, here you made a purchase from Arjun. You pay only 1200, that is cash purchase, and remaining 800 is credit purchase. When you made a purchase, goods is coming in, you need to debit the what comes in, that is purchase, and when you are paying cash means cash is going out. What goes out? Cash is going out, so you need to credit, and Arjun is giving goods for us, so credit the giver. That means purchase account debtor of rupees 2000 and to cash account 1200 and Arjun account 800. On Jan 11th, purchase account debtor, your purchase for cash. So, your cash purchase has made and paid a carriage of rupees 50. That means purchase is goods coming in. You need to debit the purchase and cash is going out. So, you need to credit the cash. Here, you are paying carriage. You are paying carriage. Carriage means it is an expense for purchase. While purchase, you will pay carriage for the goods. So, it is an expense. Nominal account say debit the expenses. So, you need to debit the carriage. The entry will be purchase account debtor to carriage account debtor, it is also an expense, carriage account debtor to cash account. You have paid cash of rupees 3,000 for purchase as well as 50 for carriage. So, you will pay 3,050 of cash. So, the entry is purchase account debtor, carriage account debtor to cash account. You will pay 3,000 for purchase and 50 for carriage. In total, you will pay 3,050. So, you will write narration being goods purchase and carriage paid. This is about the first problem. You will need to identify which account is this and the rule for that account. So, it is easier for you to pass the journal entries. Here, another one problems. It is an homework for you. You just work it out. So, it is easier for you to understand the journal entry. Here, show the following transaction would appear in the journals of Ram. So, you need to prepare the journal entries in the books of Ram. So, here you will write journal entries in the books of Ram. So, journal entries in the books of Ram. Here, Ram bought goods from Anand rupees 1,000. That means he is purchasing goods from Anand. Here they have not mentioned for cash or credit, but they have given person name. So, purchase means goods coming in. So, purchase account should be debited and Anand is giving. So, purchase account debtor to Anand account of rupees 1,000. And Anand bought goods from Ram for cash rupees 1,500. Here, Anand is purchasing. From whom? From Ram. Anand is purchasing means Ram must be sold. That means selling for Ram. When you made a sale, the goods is going out. So, you need to credit the sales. When you made a sale, you will receive cash. But here, they have mentioned cash. So, cash is coming in. Cash should be debited. That means cash account debtor to sales account of rupees 1,500. And Anand received cash from Ram 780 and allowed him discount of rupees 20. Anand receiving means Ram is paying. For you, paying means cash is going out. So, you need to credit the cash. Credit what goes out. And allowed him a discount of rupees 20. Who is allowing? Here, Anand is allowing. So, here you are receiving. You are receiving discount. It is an income for you. Income should be credit. Credit all the incomes and gains. So, person account say debit the receiver, credit the giver. So, you need to debit the Anand account and credit the cash of rupees 780 and discount of rupees 20. Anand account debtor to cash account and to discount received account. Next, Ram made cash sale of rupees 700 to Anand. Here Ram is making sales. Sales means goods going out. Going out should be, sales should be credit to Anand. Here they have not mentioned for cash or credit, but they have given person name is, it is a credit sale. So, he is receiving, debit the receiver, credit what goes out. Here Anand is receiving. Anand account debtor and you made a sale. Sale should be credit. Anand account debtor to sales account. Next, Anand supplied goods worth rupees 300 for Ram domestic use. You are preparing journal entries in the books of Ram. So, for Ram, it is a personal purpose. He is using the goods for personal use means it is a drawing. It is a drawing. Drawing is an expense. Drawing is an expense. You should debit the drawing. Drawings account debtor to, he is taking goods, that is stock. Drawing account debtor to stock account of rupees 300. Drawings account debtor to stock of rupees 300. Next, or else you can write drawing account debtor to Anand account, because Anand is giving. You are using goods, but Anand is giving. Who is giving? Anand. So you should credit the Anand account. Drawings account debtor to Anand account. Next, Ram supplied to Anand machinery of rupees 2000. Just listen here. Ram is supplied to Anand machinery worth rupees 2000. That means you are supplying, you are sell machinery for rupees 2000. That means machinery should be, your sales means machinery is going out. So, machinery should be credited. Machinery should be credited in exchange for furniture worth rupees 1000, goods of rupees 800 and cash of rupees 200. You made a sales. In return, you receive cash, furniture as well as goods. So, you made a sales and you received 3 items. One cash, one goods and furniture. So, furniture, goods and cash is coming in. You need to debit all the assets. That means cash account debtor. Here goods means it is also an purchase for you. Goods is purchase. Purchase account debtor and also cash and furniture. Furniture account debtor to, here machinery is going out. You made a sale of machinery. So, machinery is going out to machinery account. Here, you will receive a cash of rupees 200 and goods of rupees 800. That is purchase of 800 and furniture of rupees 1000. Total, you supplied machinery worth rupees 2000. So, your sales of machinery should be 2000. Here, the debit and credit is balanced. Here, the debit is 2000 and credit also should be 2000. So, here you made a sale of machinery. In return, you will receive cash, furniture as well as goods. Next, Anand charged Ram commission of rupees 50. Here, Anand is charging commission for Ram. That means Ram is paying commission. Ram is paying commission. Paying commission is, commission paid is an expense. You need to debit the expenses. When you are paying cash means cash is going out in the form of commission. Here, Anand is receiving. Anand is receiving commission. He is the receiver. You need to debit the Anand account. Anand account debtor to commission account. Commission is an expense. You are paying cash in the form of commission. So, you need to credit the commission. Anand account debtor to commission account. Next, Anand received a check for rupees 1000 from Ram in full settlement of 1050. That means Anand received means Ram is paying. Ram is paying check. That means cash is going out. He is liable to pay 1050. Instead of he is paying only 1000. That means remaining 50 is discount discount received. Discount received is an income. Income should be credited. Here, Anand is receiving a check of rupees 1000. That means Anand is receiving, debit the receiver, Anand account debtor to you are paying check. That means you are paying through bank. Bank account should be credited and discount received should be credited. Anand account debtor to bank account to discount received account. Next, Ram check was paid into bank. That means you are paying, you are given a check to Anand. He is depositing it in the bank. So, here this entry will not affect for the Ram because he is already considered that I have paid the check to Anand. So, this entry is not affected. It will affect only the bank as well as the Anand. So, Anand is receiving, bank is giving. So, here it will not affect the Ram's account. Next, Ram advanced a loan of rupees 2000 to Anand. That means Anand is receiving a loan from Ram. He is receiving. So, he should be debited. Anand loan account should be debited because he is receiving in the form of loan. So, Anand loan account should be debited. Anand loan account debtor to cash account. Here, cash is going out. Anand loan account debtor to cash account. Next, Ram received 500 from Anand for repairing the private car of Anand. That means Ram is receiving rupees 500. That is cash coming in. So, you need to debit the cash account debtor to you are receiving cash through repairing the private car of Anand. That means from repairing. So, cash account debtor to repairs account. Here, you made a repaid for Anand private car. Anand private car. It will not affect either you repair his private car or office car. It will not affect. For you, repair is considered as it is an income for you. That means you are rendering services, you are receiving cash. So, cash should be debited and repair you are receiving through repair. So, it should be credited. Cash account debtor to repairs account. So, this is a homework for you. I explained the entries. So, it is easier for you to pass the journal entries. We meet in the next section. Thank you.